Well, backed by the Greens and just enough votes from independent MPs, the Gillard government this week delivered on its election non-promise to introduce a carbon tax as the first step towards establishing an emissions trading scheme in 2015. So the big producers of carbon dioxide have to pay $23 per tonne from July the 1st next year, or will they? I spoke to one of those most acutely affected and one of Australia's biggest energy suppliers, AGL boss Michael Fraser. Well, Michael Fraser, at one level, the passing of the carbon tax legislation provides certainty, but on the other hand, the polls aren't good for the government and the coalition says that it's going to knock it off or repeal it later. So, I mean, does it feel certain to you? I mean, how do you feel about the opposition's pledge, for example?
Well, I think one of the things we can say with certainty is that we've still got uncertainty, and that is very unfortunate. For people like us, this is an industry that has very long-term investment horizons, and what you want is some certainty about what the policy position is going forward, and the sooner that we can get to a bipartisan agreement on the policy, the better for the industry.
Well, how do you feel about the opposition stance? Do you think that they're doing the right thing?
Look, it's disappointing. I mean, we come at this from a point of view of saying both sides of politics have exactly the same emissions reduction target by 2020. And what we then get concerned about is how do we get there in the least cost way for Australian families and businesses. And we've consistently said, and as many other people have come to the same conclusion, that an emissions trading scheme is the least cost way of getting there. So it would be good to have agreement on that.
One of the businesses you're in is wind generation. Is that now worthwhile with the price of the renewable energy certificates?
Well, right now, today, wind is uneconomic, and that's really been driven as a result of the over-subsidisation, if you like, that was out there for rooftop solar, domestic rooftop solar. That created an oversupply in the renewable market. We see that oversupply being cleared around 2014, 2015, and at that point in time we see the price of renewable certificates rising quite significantly. The other thing, though, Alan, that I would say about the investments that we have in wind farms is that we have a number of major long-term contracts for the Victorian Desalination Plant, the South Australian Desalination Plant, and also with Melbourne Water. And those long-term contracts have fixed prices in them, and so they've underpinned a lot of the investments that we've already made in renewables. You've
recently signed some gas contracts for gas supply.
Yes.
It's been speculated that you're getting $6 per gigajoule for that. Is that correct?
We've got confidentiality arrangements in place with our customers, so we're not going to talk the specifics of it, but what we have said is that in the case of the contract with QGC, that's an oil-linked price, and it is substantially above where gas has been traditionally traded in the Australian market. And likewise, we've just signed a deal to supply gas to the Mount Isa region, and again, I think everybody's understood that that is substantially above where gas prices have traditionally traded.
Right, so that's the bottom line really, is whether those contracts you've signed and also the market in general is showing that the gas price is now rising and will continue to rise. What do you think?
Absolutely. I mean, there's no question. You know, historically, gas has traded around $4 a gigajoule if you spoke to most people, some contracts for less than that. I'm absolutely convinced that we're heading to a price regime of $6 to $8 a gigajoule. And you know, one of the things that I might add in that space, you know, with all of the debate that's around coal seam gas at the moment, that is simply going to put further upward pressure on prices. And quite frankly, when I look at the New South Wales market, out around 2016, 2017, we have a number of major contracts which come to an end, and there is a real question about where is New South Wales going to get its gas from, and that's going to put upward pressure.
Well, as you say, there's a lot of controversy about coal seam gas, particularly in New South Wales. Where do you think that's heading?
Well, the government has a moratorium in place at the moment, and they are looking at the whole issue and what standards need to be put in place. From my own perspective, there's an enormous amount of misinformation that has been put out there about the industry. I firmly believe that by doing the proper work up front and actually understanding the groundwater aquifers that you're dealing with, that the agricultural industry and the coal seam gas industry can quite happily coexist. Reality is we actually do need to get on with it, because I am concerned out 2016, 2017, where is New South Wales going to get its gas from?
Do you think they'll run out?
Well, right now, there is some gas in Bass Strait which will help supply New South Wales beyond that period, but if you wanted to go and sign a firm long-term contract, you actually couldn't do it. So there is the potential, if we don't develop...
You can't sign a long-term contract now.
Right now, to go and sign a long-term contract, no. If you look at all of the commitments that have been made for gas to supply the LNG projects, those projects are all still around looking for reserves for their LNG projects. There is surplus gas or available gas in the Victorian market, but the traditional source for New South Wales out of the Cooper Basin, that gas has been committed elsewhere.
I mean, not only is the gas price rising, possibly even doubling, as you're pointing out, but the electricity price is rising as well. I mean, energy prices in general are rising quite a lot.
Absolutely.
How much can you see the electricity price rise?
Well, a lot of that actually depends on where governments go with their policies. So this issue we're just talking about, gas is obviously a transition fuel. We've had a price on carbon this week, and whichever way you look at it, gas will be an important component in literally keeping the lights on. If we don't get on with developing coal seam gas resources, that's simply going to push the price further and further. And as I said, a real question, where are we going to get the molecules from? You know, what happens to coal contracts in New South Wales as they roll off and move to export parity is another driver of price. Where do state governments get to with various feed-in tariffs that they have? What happens with network prices? There are a whole range of issues out there which are going to impact prices. The one thing that we can say for certain is that electricity prices, and gas prices for that matter, are going to continue to rise right throughout the decade.
Do you think that the New South Wales government will sell the rest of the generation assets in New South Wales? And if so, are you in the bidding?
Look, that would be my expectation. The government has said it will make a decision by December, so we have to wait and see the outcome of that process. If they are to sell the generation assets in New South Wales, then yes, we are interested in those assets, and we'll have a look at them again the second time round.
I suppose it depends on price, though.
Absolutely. I mean, we demonstrated in the first time we are going to be very disciplined in our approach to that process, and it will be no different, our approach the second time round.
The federal government's got a contracts for closure process going on where they're paying to take out some of the brown coal assets. You've got an investment in the Loy Yang A power plant in Victoria. Is that bidding in that process?
No, it's not. It doesn't qualify. So Loy Yang is one of the better brown coal generators, if we put it that way, in terms of its emissions intensity, and it's only those that have got higher emissions that are eligible.
Do you think that's fair?
I do. Look, I mean, the government's been quite clear up front that it wants to take out the highest emitting plant as early as it possibly can. Plants like Loy Yang are actually needed to keep the lights on. That will be there for some time to come.
Do you have plans for gas baseload power to replace Hazelwood if that is taken out?
We are certainly interested in pursuing the development long-term of baseload gas generation. And those contracts for closure are actually quite an important component in looking at the supply-demand balance in Victoria. No doubt they will bring forward the requirements for baseload gas from what otherwise would happen, and we certainly would look to be there.
Thanks for joining us, Michael Fraser.
Thank you.